credit card transactions will be subject to a 20% TCS versus 5% starting the 1st of July. So that means travel will get a lot more expensive. Let's connect with Rohan Mittal. He's a CFO at Yatra Online to decode the impact of this and lots more. So at the get-go, Rohan, hi, thanks so much for joining in. I just want to understand if someone books on an online portal versus directly with the hotel, is there a difference in terms of paying upfront TCS versus paying it later?
As per the recent notification which came out 3 days ago, at a net level, there will not be a difference. So the way it will work is that for an online travel aggregator, the deduction of 20% TCS will happen immediately. If the consumer is booking that ticket or the hotel rather directly with the hotel provider, the payment will still happen in a foreign currency. In the credit card statement, the additional TCS would still reflect as an additional deduction. So that's the only difference, which would eventually get adjusted against the annual returns of that taxpayer.
Understood that. It's just a matter of timing as to whether or not it would be upfront or been deducted by the bank later. So, yeah, you've clarified that. So, Rohan, what about the outlook in terms of booking with a domestic travel agent versus a global travel agent? Is there any differential in terms of the tax deducted?
Now a level playing field has been created with the recent amendment. Earlier, when the taxation was 5% of TCS, right, that was subject to Indian tour operators. So if you were theoretically booking it online through an international operator, the 5% TCS could have been avoided, right? But today, since the international credit card payments have been brought under the ambit, it's a level playing field between the Indian operators as well as the foreign operators.
Hi Rohan, this is Anisha also joining in the conversation. So as a user and a traveler, is there any way out for me to reduce this 20% levy in any way? Is it a factor that perhaps I can make an NEFT payment to my tour operator or do a bank-to-bank? Is there any option available at all?
At the moment, basis the information that is available to us, other than booking your travel before 1st July, which is when the notification goes live, we are not seeing any optionality in terms of avoiding the TCS payment.
There's no choice, you'll have to shell out more. But Rohan, with respect to understanding this tax better, this is of course not coming as an additional expense. This is a tax which has been collected, and of course you can claim the refund later. But help us understand, would it increase the amount of compliances needed, the modalities needed in terms of filing of these taxes at your end as well? The Form 26AS, etc., that will be needed as well. Will we have to follow up a lot more with you guys? Have you put in our PAN, etc., as well?
So let me break it down into a few sections. First and foremost, organized operators such as Yatra have already been complying with the regulations because we were deducting 5% TCS on international tours that we are booking. And we're required to fund this entire amount to the government by the 7th day from the last month end. So typically before 7th of the succeeding month, we are actually required to deposit this amount with the government in order to remain compliant. And this reflects in the quarterly 26AS of the taxpayer as well. For us, from a compliance adherence point of view, there is not really a significant change as far as tours and travels are concerned. Yes, for bookings which were happening for hotels, which were not coming under the tour package ambit, we will have to bring in an additional compliance, but should be relatively easier for us to do. The other thing that needs to be looked at is the AD banks, right? Who will be required to deduct this amount if the transaction is happening directly between a consumer and, let's say, an international hotel, where it's not being routed through an OTA. There might be some additional operational requirements which the AD banks should be will be able to comply with. So we are not seeing any significant compliance-related obstacles in terms of implementing this. In terms of follow-ups, I mean, we are absolutely compliant, and we have to remain in that sense. So we don't see a reason why a consumer would have to follow up with us in terms of checking whether the TCS which was deducted has been deposited or not. It happens actually on a monthly basis, while to a taxpayer it can be visible on a quarterly basis.
So, Rohan, just to, for example, understand, as Anisha said, of course, you can claim it back. So, if I take a trip and I make the expenses mid July, when would it actually reflect back into my account? And a double prong question, are you worried at all that come July that people will be a lot more cost conscious and may actually reduce the duration of their trip or refrain from traveling altogether?
As far as the reflection is concerned, this would happen when the taxpayer files their March ITR, right? And if there is any refund due, it typically comes in over the next 3 to 6 months. Fortunately, the refund process has been expedited over the last many years, which I'm sure all of us have seen. So we don't see a major challenge over there. As far as the demand is concerned, travel has moved from being an aspirational consumer behavior to a more essential consumer requirement. So we don't see this structurally impacting the overall sentiment as far as the demand for travel is concerned. I'm sure we've all recently seen the DGCA announcement where 30th April, the highest number of passengers were recorded on Indian airports. So the amount of tailwinds that we're seeing in as far as the overall travel sector is concerned is phenomenal. We don't see this as a structural dampener to that.
Okay, so that's the take coming in. But Rohan, with respect to the other details which are expected from this particular ruling, have you made any sort of recommendations to the ministry? Are you expecting some sort of rollback, or are you guys pretty much satisfied with the kind of announcements that's come in?
I think one of the critical requests that we would have probably is that instead of an annual reconciliation, it should be a quarterly reconciliation. Just to elaborate on what I'm trying to explain over here is that instead of the TCS which gets deposited against a taxpayer's name, instead of that getting reconciled on an annual basis, if it could happen at a quarterly basis, I think the amount of cash which gets blocked at an individual taxpayer level would significantly come down. And I think that would be a very, very strong positive move if the government were to enable that. We are yet to see if any such announcement comes through.
You being too optimistic in saying that there's perhaps not going to be a big impact on travel. Yes, it's not just aspirational anymore, but if there is a a cash outflow of 20% more, all of us are going to think about our travel, whether as even a 1 point or even in terms of cutting down a number of days or cutting down a number of travel, etc. Are you not worried about it at all?
I'm just going to pick an example of automobiles where there is a 1% TCS which was introduced a few years ago. I don't think the automobile demand was structurally impacted. I understand that there's a delta between 1% and
Yeah,
20%.
exactly.
Yes, of course, but we've typically not seen that acting as a strong structural dampener. Also, I mean, we are hopeful that in case it starts to impact the demand at an overall level, the government would also take notice of that. And in that case, the TCS numbers could get amended at a future date.
And maybe this doesn't come under your purview, but I'm just going to still ask you the question because there's lots of chatter and buzz. What about payments made for purchasing foreign goods or services from India, subscription services, newspapers, magazines, online streaming services, etc.? Will this rule not apply to this, or it will?
Everything except medical tourism related expenses and education expenses, the rule would apply to everything.
Okay, so looks like for everything, any amount of foreign expenditure that you do, you will have to shell out more money, and that shelling out will be to the tune of 20%. So you have two options, either pay more or make your bookings before 1st of July. And perhaps that's something that Rohan is banking on. Rohan, is that the case? Are you seeing any amount of increased bookings that people who are sitting on the sidelines are going in and punching in their order and booking the travel tickets soon?
Absolutely. I mean, if you're sitting on the fence
Yeah.
on whether to book a travel or not, or negotiating at the final cent level, then automatically this 20% would be a strong fillip to just consummate the booking before 1st July, undoubtedly.